people that you would think would be the most all in on the AI trade right now are actually selling and getting out. One guy said, I'm already like 65% in T-bills. This is probably a time, if you're sitting on some gains this year, take some off the table, maybe potentially think about putting on some hedges for the next of the year. AI and AI adjacent companies are 45% of the S&P market cap, not NASDAQ, S&P.
Special coverage from the floor of the World Symposium is brought to you by Palisades Gold. Adam Taggart joins us today. You'll recognize him as one of the most important and bigger channels on YouTube in the financial space, Thoughtful Money. I think people have been following you for quite some time. I'm personally a fan. Love your show. Everybody should follow Thoughtful Money.
That's so great. I was just going to say, not nearly as important or large as the David Lind report.
No, absolutely not. That's not true. But that's why I'm interviewing you, Adam. So great to have you on. The major themes of your show I like to talk about because you've got a
sure.
It's a good sentiment gauge. The people on your show and other people on other media, what they're thinking about right now. Right now, there is a confluence of different forces when it comes to the macro. There is higher inflation expectations. At the same time, potentially a more hawkish Fed. At the same time, as you've talked about on your show a lot, deteriorating consumer strength, rising debt, and the deterioration of the strength of the dollar has been a common theme on your show as well.
Sure. Yep,
and
fair.
all of these things are pointing to what kind of a future, Adam?
Great question. Simple question, maybe a little bit of a challenging answer.
Absolutely.
I probably for just the viewers here, the key takeaway is probably heightened uncertainty going forward through the rest of this year. So maybe that's a quick punchline we can put up right up front here, which is markets have done pretty well again this year, and that's after 3 back-to-back years of almost 20 plus returns, or around average 20 plus returns in the market. Statistically, quite unlikely that the fourth year here in 2026 was going to be a similarly strong year, but it's kind of had that performance so far out of the gate, even despite the Iran war.
Yeah.
I would say this is probably a time, if you're sitting on some gains this year, take some off the table, maybe potentially think about putting on some hedges for the next of the year. And while I actually think the economy will actually do pretty well for the second half of this year, that doesn't necessarily mean the markets are going to do as well. So time for caution, I guess.
I want to come back to the markets. Let's talk about AI. Now, you did your MBA at Stanford. Now, back in the day, by the way, Stanford is well known as one of the top schools for Silicon Valley. It's been a feeder school for Silicon Valley for quite some time. The entrepreneurs coming out of Stanford back when you were doing your business degree versus now, the shifts in focus and the shifts in trends. Can you tell us about that?
Sure. Well, it's really interesting. So I was at Stanford when the internet revolution happened. And you know, Stanford's been a feeder school into Silicon Valley and the tech world for decades, long before I went there. But I was there and got the front row seat to another technology transformation process with the internet, and I see a lot of parallels to what we're going through with AI right now. And in fact, AI may even end up being more transformative than the internet itself. We'll find out. But crazy time. It's funny, I was not a tech guy, but of course I got swept up like that, in that like everybody else, and then went to go work for both a startup and then worked at Yahoo for a long time. You know, what I'm finding right now is back then, the big question was, where's the top, right? You know, you kind of knew near the end of it that you were in a bubble, but nobody knew where the top of the bubble was. And basically what you have to do when you're in a bubble like this historically is you just keep going until you discover that the top was behind you. And that's what we're doing right now with the AI trade. Everybody who I talk to who is in it pretty much acknowledges that it's in a bubble. The question is it, you know, using the comparable to the dot-com era, are we in late 97, early 98, or are we in early 2000, right? Are we closer to the beginning or the end of the game here? And one thing I'll share with you, if you're interested, I haven't mentioned this yet, not even on my own channel. I was at I got very lucky and got invited to kind of an elite of the elite party for the 4th of July here in America last weekend. And I now live in Nevada and was invited to this party on a mansion on the shores of Lake Tahoe. And the house next to the house throwing the party was Michael Milken's house. The house to the right had been owned by Steve Wynn.
Wow.
One of the attendees at the party was Sergey Brin,
Okay.
co-founder of Google. So I mean, that level of elite. And I don't normally travel in those circles, folks. Just FYI, I'm just a podcaster. But anyways, I got invited and met a lot of really amazing people. It's funny when you're at a thing like that and people don't know who you are. They have to treat you nicely because they think you must be important because you're at the party.
Well, you are important. You're Adam Taggart.
Yeah, you're so
Who
kind.
doesn't know Adam?
Well, I'm not Sergey Brin important. But the punchline was these were people who made fortunes
Sure.
in tech.
Yeah.
And when they found out what I did for a living, they all wanted to ask my impression of, they wanted my outlook for the NASDAQ. And as I started to say, I've got concerns that basically for the AI trade, valuations have gotten so high because we don't know where the ceiling is yet, that right now the whole sector is based upon the analysts' CapEx spending projections.
Yeah.
And right now that's basically an Excel spreadsheet that says if the money's there, we're going to build X number of data centers at this rate off into the future. And there is, I think, a building chorus of potential constraints that are likely to not make that build out be able to be physically carried out as aggressively as the spreadsheets show. And as I sort of started explaining this almost to a person, they'd interrupt me and say, gosh, you know what? I feel the same way. In fact, I've already sold all my tech. One guy said I'm already like 65% in T-bills. And what I took away from this was the people that you would think would be the most all in on the AI trade right now are actually selling and getting out.
Yeah.
These are the guys who actually make the big fortunes in technology, and in their personal portfolios, they're totally de-risking right now. So I took that as a really interesting, I mean, it's an anecdote, folks, but I took that as a really interesting data point from the creme de la creme of the tech environment.
Before we continue with the video, let me tell you about one of your most important personal assets, which is your personal privacy online. If you've never Googled your name, do it now. You might be surprised at what comes up. Data broker sites and people's search sites are quietly collecting your personal details, such as your name, home address, and phone number, making it very easy to find. Delete Me, today's sponsor, is what I use to fight back against that. After a quick setup, they scan for where your personal information appears, verify those listings, and submit removal requests to hundreds of broker websites. They also continue monitoring over time since this information can reappear over time. I've personally been using it for over a year now, and it's removed 204 of my listings, and my latest report showed 335 listings were reviewed last month. So if that bothers you as much as it bothers me, then use my link in the description down below or scan the QR code here. That's joindeleteme.com/DavidLin and use my code DavidLin to get 20% off. Take control of your privacy today. What I've learned before is that insiders sell for all sorts of reasons. Maybe they want to buy a house, their kids have to go to college or whatever. But if you're dealing with millionaires and billionaires, they don't really need that cash for personal reasons. So if they're selling, it's probably an indicator.
And this wasn't, I sold because I wanted to take advantage of this other opportunity. It was, I'm concerned, I'm de-risking. This was complete de-risking.
Have you talked to any venture capitalists in this space? I wonder if capital is still there, because if this might be a bubble, but if capital is still funding things, then it'll continue growing.
So I don't think the limiter on this one's going to be capital, David.
Okay.
I think increasingly you're going to see real world constraints, like physical constraints. Again, there's a build out schedule in the spreadsheets of all the analysts, right? It says, hey, if the cash is there, we're going to build these data centers. I think the cash is going to be there. The question is there enough land? Are there enough permits? Is there enough water? Is there enough memory chips? Is there enough capacitors? I think it's actually going to be physical limitations that are going to increasingly kind of bend that build out curve down. And we're actually seeing that. So again, I live now in Reno, Nevada, which has been a very data friendly environment, data center friendly environment. We've actually now passed a moratorium on future data centers being built out for the time being in the city. If Reno is putting limits on that, a lot of other places in America are going to be following suit.
Is it because of electricity costs, water?
Exactly. It's for all these physical constraints. NIMBYism, don't want it in my backyard. These things are loud.
Yeah.
So again, I don't think it's going to collapse the build out, but I think it's going to take it from 100%, whatever it's being forecasted at, maybe down to 80, maybe down to 75. And it's going to force a large repricing in the AI complex, should that indeed happen. And I got to tell you, I've spoken to some AI engineers, even here at this conference, who say that is a real risk.
Does that make you more bullish on real estate?
Does it make me more bullish on real estate? I mean, yeah. I mean, I think if you can identify where data centers need to go,
converting old office buildings, for example, towers.
Converting old office buildings that are, easily connectable to the grid, or whether it's, you're finding land that a major hyperscaler might want to build a data center campus on. Sure. But they're all in competition with each other right now, and the barriers are rising in terms of, hey, who actually wants one of those?
How do these constraints manifest in the markets? Like, how do we see signs of these constraints actually playing out here?
Well, I mean, there was big news, last week that was it Blackstone pulled out of what was to be the largest data center in the country, in the U.S.
Right.
So they literally, I think the campus is like relatively built out, but they pulled out, and then one of their other partners pulled out, and so it's totally up in the air whether the country's largest data center is actually going to get lit up or not right now. Now, eventually, I'm sure it will. But, and again, I'm a believer in AI. I believe these data centers are going to get built. What I'm saying is, I just don't think they're going to get built at the current pace that Wall Street is expecting right now. Because Wall Street generally thinks about it in terms of capital constraints. Is the capital going to be there to do it? I think this time the capital is going to be there to do it. I just think there's going to be too many physical barriers to build it out at the rate that the capital is expecting right now.
So as I checked a couple of days ago, 3 of the Mag 7 stocks are down year to date. Is there a consensus on your show over whether or not this is a topping pattern here?
Is there a consensus? I don't know if I'd say there's a consensus, but I would say the majority of people that I interview are taking note and seeing it as an important potential warning sign that the top could be behind us here, at least in the Mag 7 complex. I mean, it's one of the things that they are concerned about is the fact that, for much of the past couple of years, market breadth hasn't been great, right? And what's been driving the market? It's been the Mag 7. Right? It's been the hyperscalers. Now the hyperscalers are starting to lag. You would think that they would pull the market down with them, just given their size, right? But you've had these other AI components just become white hot, right? The semiconductor industry has just been on fire, right? But what that's doing is it's taking a narrow trade and making it even narrower. And semis, as you know, are an incredibly cyclical industry. When do we hit the next part of the down cycle? No idea. But we know that a cyclical industry will go boom and bust. And so everything is now riding on an increasingly sort of narrow pin, if you will. And unless that capital all the froth that's currently right now in the semis sloshes back into the Mag 7, that froth may actually start exiting. And I don't know what the next baton could be in the AI adjacent complex for that much capital to go into. So there is a lot of concern here that we are seeing like really late stage activity in this sector. And it's so large. I know you know this, David, but it's AI and AI adjacent companies are 45% of the S&P market cap, not NASDAQ, S&P. So if that sector cools off, it is literally going to take everything down with it.
It's fascinating because if you look at AI as an evolution of different technologies, it's still relatively nascent in the adoption curve. And yet we're talking about the late stages in the capital markets segment. Why is there this disconnect between the development of technologies and the adoption of technologies and how late we are in the cycle?
Well, I think it goes back to what I was saying earlier. Every technology build out, from railroads to internet to likely now, right, is you don't know where the line between too little and too much is. The only way you find it is by passing it and then realizing, okay, whoops, it's behind us now, right? And so I think that's the process we're going in right now, which is, okay, tons of capital, let's build, and then people realizing, what, we're not seeing the results, the performance results that we thought we were going to get from this. Companies start pulling their budgets a little bit. It cools off. You have kind of a large correction, probably kind of a die out of the 1.0 companies. The infrastructure is still there, You have a couple maybe of those 1.0 companies like Amazon that crosses the chasm and makes it.
Right.
But it's usually the second generations of companies that come in and build the sustainable businesses off the existing infrastructure. One thing that is potentially different this time is when you did that with railroads and you did it with the internet, when you had that die-off, the infrastructure was all there and still 100% usable. So you still had the iron rails for the railway.
Yeah.
You still had a bunch of dark fiber that could be lit up 5-10 years later.
Yeah.
With the data centers, it's a bit different. So you'll have the physical data centers there, but the chips, they kind of get antiquated within about 3 years. And so there's going to be a lot of replacement of the chips that are going into today's data center, and that cost is not insignificant. So the cost to kind of upgrade a data center is about 2/3 the cost of building the data center. Unlike the fiber, once the fiber was laid, it just sat there and you didn't really have to maintain it. Same thing with the railway ties. So it's going to be a little bit interesting going forward that there might be sort of a depreciation of the existing infrastructure that is a lot higher than what we've experienced in previous ones. And I haven't yet quite figured out how material that's going to be, but it is going to be different. It's not going to be as profitable for the 2.0 companies just to come in on top of, any fallow resources that are lying there if we do go through that 1.0 die-off.
My counter to this discussion, if I may, is that tech companies will find a way to circumvent these hard constraints. And I just saw an ad from Anduril. They're deploying these modular, small data centers that can be dropped into the middle of a battlefield.
Yep.
Because we need real-time uplink on data. And so it's about the size of, like, from here to there.
Like a 10 by 10 type.
Yeah, exactly. And then, like, one person could set it up in 10 minutes. And, it's not meant to power a whole city block,
right.
But it's meant to be used on the go. So potentially we could see more developments on the portability front.
Oh, I'm sure we will.
Yeah.
And I mean, on the energy side, I don't know if you've been looking at what they're doing with like micro reactors and stuff like that.
Sure, yeah.
So
That's fascinating.
The ability to get compute anywhere in the world and have it be sort of self-sustaining, I think it's going to be really amazing. I mean, like I said, I'm not anti-AI. I mean, I think AI is going to be super transformative. But there are going to be, a lot of these build-out constraints I mentioned earlier. But even in your example, the lifetime of these things. So you plot that thing down in 3 years. It might be sort of so antiquated in terms of its compute power versus what's available in the market. Then we're going to have a lot of jettisoning of the infrastructure that's getting laid now in a way that we didn't have with fiber and with the railroads.
And so these concerns that your guests have talked about, that you're talking about now, do you personally agree with this? I've always been curious what you agree with and what you don't agree with.
Yeah, it's funny. And I don't know if you have the problem I do, but I'll sit down. We interview really smart people.
Yeah, sure.
And I'll sit down with someone who's really bullish in their outlook and think, wow, that's really convincing. Like, I think I'm actually going to go buy some of what he was talking about. And then I'll interview someone who's pretty bearish and I'll be like, wow, it was pretty convincing too.
That's right.
So it's hard not to get whipsawed when you're sitting in our chairs. But getting back to my punchline earlier, I have these concerns, again, that not that the AI trade is dead and it's a false promise. I just think it's going through that common curve that we were just talking about of all of these technology build-outs, where you basically have a zenith, you have a big corrective event, then you have the next generation of companies that go through there. I think if we're not at the zenith, I feel like we're pretty close.
Okay.
And so I think this is the time to take gains.
Sure.
Put on hedges. It's a time, I think, to become more prudent. There've been phenomenal returns here, and for a number of reasons. One, the ones I mentioned about the complex itself, but two, on the greater macro side of things. So I just did an interview with Darius Dale. Darius is one of the most, I would say, I mean, a lot of my analysts that I interview are data centric, but few are as encyclopedic as Darius is. And Darius has been He's been a pretty consistent bull since the market bottom at the end of 2022. And he was one of the first that I interviewed to really put his neck out there and said, I think we're at a turning point, when everybody was expecting a recession back then.
Yeah.
My point is he's not been afraid to be bullish when the herd wasn't bullish. And he has just turned to being sort of short-term bearish, expecting, in his words, a 1998 style market correction this year. And if you remember back in 98, there was the Russian debt crisis, and the markets basically dropped about 15% between July and October. And he's seeing a lot of signs kind of in the macro landscape and what's potentially happening with interest rates, or at least with what the Fed's going to do. This is a bull who's basically battening down the hatches. So when I start to see a confluence of convincing reasons for caution, the things I mentioned about AI, thinkers like Darius, especially guys that are not afraid to be bullish, starting to get a little bit more cautious, I just begin to say there's enough data points here that it's starting to convince me that the probabilities are weighing on this side. So again, it wouldn't surprise me if we finish this year kind of flat from where we are right now, or potentially have gone through like a 10 to 15% correction.
Yeah. Jeremy Grantham shares your view. He was on CNBC last week.
Thank you.
Did you see that
wonderful
clip?
Company to be included in.
Did you see that clip? And he was getting roasted. Somebody called him out. Yeah, you're bearish, because he's bearish on tech. He says within 2 years, that's what he said, we're going to see a big collapse of this bubble. And then he got called out. He said, yeah, you've been bearish for quite some time. You've been calling for the same thing. You're going to be right eventually, like a broken clock is eventually. That's what he said live on CNBC.
I know.
That was vicious.
It was, especially for a guy who's as worthy of respect as Jeremy. Now, I listened to a couple of other podcasts he did after that, and he says, look, I get it, right? And in many ways, for investors, being too early is being too wrong.
Yeah.
But I go back to the and look, I'm not forecasting doom and gloom here right now. I think the probability is for like a 10 to 15% market correction between now and the end of the year. But I go back to John Hussman's famous quote, right, which is when you're in a bubble markets force you to make a decision.
Yeah.
Look like an idiot now or look like an idiot later.
I had a fund manager on my show, and he said something that for me cuts through the noise. He said, look, markets don't react to geopolitics or wars, at least not in the long term.
I agree.
They don't react to the Fed. They react to earnings. And so ultimately, if we're going to get a continuation of good earnings into Q3 and Q4, then this bubble could get bigger.
Absolutely. And to be super clear, folks, I'm not predicting right now complete doom and gloom.
Sure.
And I've been telling a lot of people who are kind of leaning bearish, especially on the economy, like, I don't see how the economy can go into recession when we're spending as much as we're spending in the AI CapEx space, which is what, like 800 billion this year or 1.1 trillion next year. If that combined with the government deficit spending at the level it's in, I'm like, look, as long as that flood, that tsunami of capital is getting pushed out into the economy, I don't see how you can have negative economic growth.
Do you think it's possible for the government to print our way into a recession? Let me just explain what I mean by that. Guests on your show and some on mine as well have been talking about how the money supply drives inflation. So if you just put the pieces together and think about it, if money supply continues to grow, and in fact larger or faster than the economy can handle, doesn't that mean higher inflation? Doesn't that mean lower spending by the consumers? Doesn't that induce a recession?
Well, so at the end of the day, what matters is wage growth.
Yeah.
Right? So if wages are keeping up with or growing faster than inflation, it kind of doesn't matter what the inflation rate is, right? So I think the answer largely depends on that. And you're getting into territory I talk about a lot here, which is a lot of people who are bearish will say, look at them. I mean, we've got this K-shaped economy.
Yeah.
The bottom leg of the K is way bigger than the top leg of the K. And people are struggling, right? You look at the decline in personal savings rate. You look at the rise in consumer credit delinquencies and now defaults, right? I mean, can't you see that the consumer is basically dying here? How can you not expect a recession to be coming at some point soon? And I say this with all sensitivity. It's terrible to say, but like, it almost doesn't matter how much the bottom leg of the K is struggling if the top leg of the K is still maintaining their spending in such a way that it keeps the averages in a healthy trajectory. And I think that's sort of where we are right now. Now, you can get to a point where enough of the bottom leg, enough people are suffering that it starts to overwhelm the top arm of the K. If the top arm of the K starts struggling on their own, that changes the whole equation completely. And the breaking point might not even be a financial one. Right? It might not be some sort of financial calamity that hits first. It could be a social one. it just could be enough people on the bottom leg of the cake, because everybody votes. That's the one thing people forget. Everybody's vote counts the same, and there's a lot more people on the bottom leg of the cake. And I think this is why we're seeing the political dynamics that we're seeing now in the US, where all of a sudden, democratic socialists, many who don't even use the democratic adjective anymore, just pure out socialists, are beginning to win elections across the country. And it's because there's enough of that bottom leg of the K that says, look, you guys tell me capitalism's the answer, but it's not working for me. I got to try something different. So I do worry more about, in an increasingly basis, what's happening societally on that.
Have you spoken to anybody that you know personally who leans more socialist, and whether or not they actually understand some of the things they're voting for?
Yeah, you forget that I just moved out of California. So I know a lot of people who think like that. Yeah. This is a huge discussion. I'll try to just encapsulate it here, which is no, they generally don't. And I think that the thought process is very different. The people that are espousing, I think, the policies that I'm guessing you and I would collectively vote for, David, they tend to do it from an empirical basis. We run the numbers. Is this sustainable? Is this what you can build a sustainable economy on? The socialist side, it's either coming from a point of grievance, right, where somebody just is coming from emotion and saying, look, I'm hurting. This isn't working for me. I'm going to try something different. Or it comes from a place of emotion. This is just the way it should be. Everybody should have free childcare. Everybody should have free education. Everybody should have a guaranteed job. Nobody should have to go hungry in retirement, which I think in a perfect world, yeah, we'd all agree with. But it's not like they're basing that on any sort of model or system. It's just a heart-driven passion cause for them. And so it's a very emotional decision-making process, and this is basically how socialism has always come in the past. Is you've had a disaffected group that gets really emotionally, feeling betrayed by the current regime, and they let in the people that are promising solutions to all their emotional rawness. And what worries me is when you hear about, if you learn about the Bolshevik Revolution, right, which led to Soviet communism in Soviet Russia. It's sort of similar. You see a lot of similarities to what's going on today. And the Bolsheviks never had more than 30% popular support at any time in their history. But they were the ones that were capturing the spirit and the anger of the downtrodden classes at the start. They built enough momentum that by the time the rest of the country realized, you know what, I don't like the way these guys are conducting things. I'm not on board with these policies. It was too late. These guys had built enough critical mass in terms of their presence in the power structure that they had control of enough of the key parts of the political machine, the state, that it became impossible to stop that momentum. And I'm not saying that that's exactly what's going to happen here in the US, but I think the people that discount that from ever happening have not studied their history.
And I think it's important to remember that throughout history, the people who have adopted Marxism, Leninism, Maoism, the first were the elites that attended the top universities and then studied these ideals and then passed it on.
So I've interviewed Peter Turchin. I don't know if you're familiar with his work, but he's got actually a formula for basically how societal collapse or at least regime change happens in countries. And he's got three key inputs, and one of them is excess elites. You have to have this class of people who are largely well-educated, but they're finding themselves not participating in the wave of prosperity that the generation before them had.
Yeah.
And they start becoming really disaffected with that, but they're intelligent, good communicators, they can agitate and organize. And what was interesting was of the countries that he studies, he doesn't study every country in the world, but of the countries that he studied, at the time I interviewed him, which was about 8 months ago, the US, he said, was at the top of his list of ones that were kind of in the danger zone. So,
okay. 2 years.
Interesting to say that to a Canadian, though, because I kind of look like you guys are ahead of us in a lot of these dimensions.
I don't feel like that's a race I particularly want to win.
I know. I know. And I don't want to catch up to you in it either as an American. Yeah.
Yeah, things are wacky in Canada.
But just to underscore this, I really actually do worry about this, that this is, a defining theme of at least the next decade and maybe the rest of yours in my life.
I worry about the declining labor force participation. And so, over the last couple of decades, it's risen primarily because women who were out of the labor force then joined the labor force. And then something happened, which was that it plateaued about a decade and a half ago.
Yep.
And now I wonder how that's going to change with the advent of AI. And that's going to have huge social ramifications, not just economic ones, if people just don't work.
So I'm super glad to hear you bring this up. And it's a confluence of a couple things. I've interviewed Nicholas Eberstadt. I don't know if you've had him on your program.
No.
If you haven't, I recommend you get him on. He wrote a book called Men Without Work.
Okay.
And it was basically talking about this phenomenon of the millions of healthy working age Americans who have basically just checked out of the workforce, where they've just largely just kind of given up. And it's amazing how big this cohort is. It's amazing these people manage to kind of feed themselves and still persist, but through government support and parental support, they're able to kind of just get on by. And it's becoming this lost generation of workers. And that was happening pre-AI. Now you have AI, right, which I completely am on board with, to displace labor at a much faster rate than we can find productive alternative use for that labor, right? And Keynes has a theory of technological displacement, which is if a machine can do a job better than a human, you should replace the human. But you've got to be careful at the rate at which you displace human labor, because if you're not putting it towards something else, you get this social problem, the social crisis, the cost of which is larger than the benefits of the technology. Mm-hmm. So I see a lot of danger of that. And especially when you combine AI, which gets smarter and smarter at an exponential rate, with robotics, right? Which begins to displace what unskilled labor can do or low-skilled labor can do. So as you have software that can, wipe out a ton of increasingly white-collar jobs, and then you have robotics, which can just blow out a lot of blue-collar jobs.
Yeah.
I don't really know. I get that, yes, AI is going to create a lot of other potential to create new jobs and a lot of potential kind of for like the solopreneur, like the guy who can basically create, a world-class company by programming a whole bunch of agents. So he's like the only employee of the company.
Yeah.
And it could be a huge company and he could be the next trillionaire after Musk, right? Yeah. Like I can see that potential, but that's a pretty small slice of the bell curve of distribution of labor.
Right.
For that bottom 80, 90%, I don't yet see what they're going to be repurposed as. And I'm open and I'm hoping that we'll just figure it out along the way.
Yeah.
But you and I talked to a lot of people. I haven't heard an example brought up of like, well, this is what'll happen. This is where you can put 20 million service jobs.
Right.
Right. So that's what I worry about.
What's one economic theme you're exploring on your show? And I'll share mine. 2 years ago when I interviewed you at another conference in person, we had talked about how income inequality was your number one concern at the time. You talked a lot about that today. And how that influences people to lean more socialist. Besides that, Adam, any other themes you're exploring?
Oh, let's see
like
here.
Bigger picture themes.
Yeah, bigger picture themes. There's one I spend a lot of time thinking about.
Yeah.
And I'm hesitant to mention it here because it's a little, people have strong emotions on both sides.
Sure.
But it's this clash between East and the West. So I've got daughters, they're college age. Mm-hmm. And I'm increasingly thinking that one of the defining themes of the rest of their lives is likely going to be sort of the fight for Western civilization. And it's tied to this socialism versus capitalism struggle that we talked about earlier. But just in terms of like the values that created the West, we have an increasing, I think, assault on them, both by parties outside of the country, but also inside the country. A lot of the indoctrination, if I can use that word, that's going on in our education system, and things like that. It's really teaching young American kids, young Canadian kids, that we shouldn't be proud of the history that built the countries that we have today. And, it's all about dismantling. I mean, honestly, in the US right now, you're having some candidates that have been elected in the past, won primaries in the past couple of weeks, who are literally saying, I'm here to basically tear down Western civilization. So that's going to have all sorts of effects, both socially. How did it start? I don't want to put myself out there as an expert on this.
I don't think anyone has one answer.
Yeah, I don't think anyone.
But just based on your observation, you're observing, and there's trends, and you talked about education in the schooling system.
Yep.
There's trends now where different educational departments and institutions, when you start prioritizing hiring different races over others for professorship positions.
Right.
And I'm just curious to see how that even started.
I'm going to guess. I think it sort of started with, and again, folks, I'm not an expert, so I'm sort of speaking extemporaneously here. But I think it started with the rise of sort of Reagan's America, where that was where there was sort of a resurgence of, tried and true American values, America's shining city on a hill. We had gone through some tough times where America was starting to question itself.
Yeah.
And it got back sort of national pride, let's get back to basics. And I think the opposition at that time said, all right, we lost, right? Reagan beat us. What can we change about our strategy? And they started playing a long game.
Right.
And they basically said, look, if we can start getting voters young, basically if we take over the education system, we can influence how people will think the rest of their lives.
Right.
And then we can get tomorrow's voters, and we'll have a factory of future voters going forward. I think that was one path internally, and I don't have a lot of evidence for this.
Yeah.
But it's hard not to suspect that countries like China, like Russia, would look at that and say, well, if we can support that, we can basically make the capitalists do our work for us. We can convince them over time, over decades, to dismantle the advantages that they're using to beat us.
Yeah.
And so I think it's sort of a two-pronged approach here, where you had what started as an internal movement that then has gotten a lot of support from players outside who have realized it's a real pressure point where they don't need to commit a lot of money or do anything kinetic against us, but can still achieve the long-term outcome they'd want.
I'll share with you something I'm thinking about. That's really cool, Adam. Is whether or not we need a free market to flourish. And the one book that's been on my...
This is a great discussion, by the way. I didn't think we'd get this meta. So
well, you talk to people about gold and the dollar all day, so I just go to Adam's channel if you want a discussion about that. So one book that's on my reading list is The People's Republic of Walmart. And a quick synopsis of the book is just Walmart, being so big, has a larger market cap and perhaps even revenue than some smaller countries.
Sure.
One could argue its structure operates like a command economy.
Sure.
And look how it's doing. I recently went to Asia, where I witnessed firsthand the prosperity in Singapore. And then I went to Korea, and people are doing very well there in some ways with better infrastructure than North America. And you have to understand that Singapore is a dictatorship. Mm-hmm. South Korea was pretty much a military dictatorship throughout the 80s. And yet these two examples in China, I'm not even talking about China, that's more complex, but these two examples have lifted people out of poverty in just a few decades. Meanwhile, of course, you have Cuba, Venezuela, and North Korea. The example has gone wrong.
Where it didn't work, right.
And the Soviet... So I'm trying to understand through my conversations and my reading why certain command economies have failed and others have flourished, and whether there's something to be taught and learned here in the West.
Beyond the benevolence of the dictator, if you will, what have you learned so far is a success factor?
Ironically, these command economies have integrated at their core principle a free market structure, but just with a multi-decade plan and some government intervention to facilitate that plan. It's very interesting. It's kind of like forced free markets here.
So I do think there's something that the North American system can take from that.
Right.
And I'm not advocating for dictatorship, folks.
Yeah.
But this goes back to our conversation about capitalism and socialism. The narrative for a lot of the people that are leaning socialists is capitalism's failed.
Yeah.
Right? It doesn't work. And I feel like it doesn't work because I'm looking at my personal situation, the people around me.
Yeah.
Right? And I get it. In other words, I don't think our version of capitalism is true free market capitalism as you and I would create on a piece of paper if we were asked to do this. It's largely gotten co-opted in a lot of ways. Corporatism, crony capitalism, corporate bailouts, all that stuff. And it has driven a lot of discussions, at least with the folks that I've had on my channel, and it sounds like you're thinking similarly, is, okay, well, look, do you abandon the model and embrace the model that has a 100% track record of failure?
Yeah.
No, that doesn't make sense. What you should do is you should go back to the model that has created more prosperity for more people in the course of human history and say, how do we write it, right? How do we fix the things about it that are broken, right? And a large part of that is, it's got to be based in free market capitalism. You've got to let, creative destruction happen. You got to let malinvestment clear. All the things that we're not doing right now.
Yeah.
And so you need that, but you also need, like FIFA, you need a defined playing field, and you need referees.
Yeah.
Right? And, right now, a lot of our refs are, sometimes incented to look the other way. Some players are allowed to play by certain rules that other players aren't. And that's just because the rich and powerful are, using that to their advantage. So, having sort of a minimal but fair and rigid set of regulations and enforcement, I think, is critical to success through the free markets. And it sounds like what you're saying is that's kind of what these benevolent dictators were doing. They were being the rigid enforcers.
Right. Okay, we're almost out of time. Give us, before we go, one investment or asset class you do like. We talked about things that may be on the brink of rolling over, something that's not at the zenith. Okay.
You're going to laugh just because you've mentioned it a couple of times here, is what you can go listen to on my channel. But I think the precious metals may have bottomed here.
Okay.
I think they've gone through the froth has been removed that we saw earlier in the year. They then got hammered down once Warsh came in and beat his chest that I'm going to do whatever it takes to get inflation down. But in the process of that, one of the the froth had to come out. One of the things that was really pressing down on the neck of the precious metals were high oil prices. Yeah. As countries were forced to start selling their gold to afford the higher oil prices. Right. Oil has been coming down. As long as oil stays in this area or goes down even further from here, at some point, the precious metals those shackles really should start coming off. And I think from a price action standpoint, it's really too early to call a bottom. I shouldn't. But the price action standpoint, it's actually really looking quite positive.
Looking less frothy than a couple months ago.
Yeah. Okay. The other thing I'd say too, just talking, even though we're here at this conference, it's being talked a lot about here. A lot of the people that I've interviewed over the past couple of months could not be more bullish on copper's long-term prospects.
Yeah, I've noticed that too.
And like I said, I can see that the AI trade might not continue at the rate that it's currently forecasted to grow at, but it's going to get built out, and they're going to need a lot of copper to do that.
Yeah. All right, Adam, great talk. Thank you so much.
Hey, real pleasure. And if you're watching, folks, subscribe to this channel, The David Lynn Report.
Thank you. Where can we go to watch your stuff?
Just go to thoughtfulmoney.com. You can see all my content there, but also if you'd like to get some help from a financial advisor in figuring out how to play some of these trends that David and I have talked about, you can schedule that for free, no obligations. They're just there to help you out. Interesting. All right. Thank you so much for watching. Don't forget to like and subscribe and follow Adam. Links down below.